Alright, so in this video, I want to talk about 3 earning trades that I'm going to do today, right now. Look at this ridiculous market. Unbelievable. IWM alone is up 11% in 3 days, and it's an index. Up 11% in 3 days. If you're new to this channel, my channel is all about personal finance, investing, growing your money, keeping more of your money. I'm a CPA from Montreal, but my whole point is I don't want to work forever. I want eventually to be financially free, and I want to use the stock market to reach that. So this is my journey documented. If you're interested, consider subscribing to the channel, liking my videos, and sharing with your friends. All right, so if you watched my video yesterday on MasterCard earnings, you'll understand my strategy, but I'm going to do it again with these following stocks. So I'm going to go to Finways. I'm going to filter the market cap on large over 10 billion. Earnings date tomorrow or today after market close, but I'll do first today after market close. And then I'm going to sort by market cap. It's already sorted by market cap. So I've got Microsoft, Facebook, Tesla. Now for sure I'm going to do a Tesla trade. Tesla is a big mover, has nice premiums. Hopefully it continues moving to the upside like it keeps doing, and that it doesn't drop today. But I'm going to do a put credit spread on Tesla. Just like MasterCard yesterday, I'm going to do a put credit spread on Tesla. So I'm going to look up Tesla. I'm in my margin account because I can only do put credit spreads in a margin account. So I'm going to look up Tesla under option. And then I'm going to choose a vertical because it's a vertical put credit spread. I'm going to choose the expiration May 29th. I'm going to go on the put side. I'm just going to click anywhere. And then I'm going to look at the expected move. So the expected move I estimated by just looking at the money value of the put and call option. So that would be the 800 strike, and you can see the put is trading at $76, and then the call is trading at $76 as well, or $78. So it's about $150, $160 is the expected move either way. So I'm going to go $160 lower than the current market price. So that's about $640. So that'll be my short put. And I'm only doing the put side, I'm not doing the call side. So 640 is my short put, and my long put will be 635. So basically the capital required for this trade is $500 minus the premium that I can collect. And based on this, it looks like the premium that I can collect will be around 90 cents. So I'm gonna go ahead and just put $1. I'm gonna start off with $1 and 640. Let's just look at Delta. Delta is 20. So probability of in the money is probably around 15%. So yeah, I'm going to go with this trade. Now my max loss is $5 minus, or $500 minus the premium that I can collect. So let's say I'm able to collect $100. So my max loss is $400. But the reason I go for 30 days is that it gives me time to manage the trade in case it goes against me. So if Tesla opens tomorrow below 640, then I can sell call spreads. So I can sell a call spread at maybe 700, 705, collect some premium there. My put side will definitely be a loser, but at least I'm winning something from the call side. And because I have 30 days to go, then the premium will be high. As time goes by, if Tesla moves back up, then my put side becomes a winner. If Tesla does not move back up, I'll keep moving the call spread closer to the short put of 640, therefore collecting even more premiums. So instead of losing $400, I would lose maybe $100. So the whole point is it's a high probability trade. I have a good chance of winning because I'm 160 points away. Even if this trade becomes a loser tomorrow, I'm not losing $400 max loss. I'm going to be losing less, and I have 30 days to recover. Who knows, maybe it'll become a winner. But I don't think Tesla's going to drop below 640 tomorrow. But the idea is, my plan is to close the trade early for 50% profit. I don't plan on waiting until the full expiration period. So I'm going to go ahead and send this order in. I'm going to send order. Sell to open May 29, 640. Buy to open May 29, 635. So it's 5 points away. I'm asking for $100. Send order. And now the next one I want to do is Facebook for sure. So I'm going to do a put credit spread on Facebook. So same thing, vertical, expiration May 29th. Click anywhere on the put side. It looks like May 29th expiration doesn't have a lot of volume, but I want to go 30 days away. That's why I'm picking May 29th. Just out of curiosity, let's see what May 22nd has. You see, May 22nd is better. And let's look at May 15 is gonna have much more volume for sure because it's a monthly expiration. So if I go to May 29th and then just pick the at the money strikes just to see what the expected move is. So if I go for 195, 195, the put is trading for $10, so the call is probably trading for the same thing. So yeah, $10, so $20. So the expected move is about $20. So Facebook's at 195 now, so I'm gonna go at 175. Will be my short put on Facebook. So 175 is over here, and then the long put that I'm going to buy for protection to cap the trade, the buying power required or the capital required for this trade will be 170. So once again, it's the same risk, only $5 or $500, but this time I could collect about looks like I can collect about 80 cents actually. Now let's look at the delta on this. It's 24. It's pretty high though. It's not a probability wise, it's not great. Now I want to go see what IQ Edge is showing me in terms of probability in the money. Okay, I'm going to log into IQ Edge, and as I'm logging into IQ Edge, it's going to log me out of the browser version for sure. I'm going to use IQ Edge just to see what the probability in the money percentage is based on the broker. So I'm gonna look up the option chain of Facebook. I'm gonna choose May 29th expiration. I'm gonna choose all strikes. I'm gonna go look at 175. That was the strike that I was looking at. It shows me 20%. So if it's 20%, I need to collect at least $100 for this trade to make sense probability wise. What I mean by that is if I have a 20% chance, let's say I have a 50% chance of winning and 50% chance of losing. So if I have a 50% chance of winning $200, let's say, and a 50% chance of losing $300, then that's not a good trade because in the long run, I'm going to end up losing more. 50% times 300 is 150 and 50% times 200 is 100. So in the long run, I'm going to be losing $50 each trade on average. So if I know that this short strike has a 20% chance of losing, so that means, and my max loss is $500, so that means I need to collect at least $100 for this trade to break even in the long run. Anything more gives me an edge. Now with this trade here, so I'm going to log back into my browser version and log me out of the IQ Edge, the desktop version. I'm going to look up Facebook again, option vertical, May 29th. I'm going to click on the put side. I'm going to choose my 175 strike to set it up again. So as I saw in IQ Edge, it's about a 20% chance of losing. So it's not enough premiums collected, but I think I'm still going to go for the trade. So 75, I'm going to get about 80 cents. I'm 20 cents short, but my plan anyways is to get out of the trade early. I'm not going to hold on to it till expiration. That 20% probability is at expiration, the trade has a 20% chance of trading below 175 on May 29th. That's what that means. So you know what, I'm gonna put it at 85 cents on the high side in case the market drops a little bit towards the end of the day. If it gets filled, great. If not, then too bad. So I'm gonna click send order. Sell to open, one Facebook, May 29, 175. Buy to open, one Facebook, May 29, 170. Trying to collect 85 cents. Risk is 421. Send order. Let's see. I don't think Tesla got executed. No, it didn't get filled. And let's see where it's sitting at right now. Tesla 240 and 50. I'm pretty sure 90 cents is going to get executed. Let's try 95 cents. So 95 cents on Tesla. Nope, not getting filled. Okay, and then I wanted to do another one. Microsoft, I'm not sure if I want to do, actually I do like Microsoft, it always goes up. Let's look at Microsoft, vertical, May 29th, put, look at the at the money strike, so 177.5 is the closest I can get. So $8 for the put and $7 for the call, so about $15. So it's $15 away from Microsoft. Let's see if the premiums make sense though. So 177 minus 15 is what, 162.5 about. So let's go 162.5 and 157.5. put side only. So that's actually not bad. I can collect almost $1. This is giving me a 30 delta, so that's not good. So I don't know, let's go lower. Let's go 160 and 155. I think I'll do Microsoft as well, actually. So, oh wow, big difference. 27 delta. So I'm actually not collecting enough premiums based on the probability. So maybe I should not do Microsoft. I should be disciplined and not do Microsoft. All right, so the other one I wanted to do was, if I look at tomorrow before market open, was McDonald's. Let's look at McDonald's. So I'm not going to do Microsoft, although it looks tempting, but probability wise doesn't make sense. And even Facebook doesn't look good. But anyways, I'm looking at McDonald's right now, May 29th. Let's look at the money strike. So 188. Is there a 188? No, the closest is 190. It's trading at around $9, and the call side is trading at around 7. So 9 plus 7, 16. 9 plus 8, 17. So let's go for 18. So let's go for 170 strike. Let's go for a 170 strike on the short put. So a 165 on the long put. Okay, looks like I can collect 50 cents, so that's not good at all. What's the delta on that? 27. All right, forget McDonald's. So it looks like it's just me and Tesla right now, because you know what, I'm going to cancel Facebook, although it has a good chance of being a winner. I'm pretty sure Facebook is going to go up after earnings, but I have to stay disciplined. I don't want to make any assumptions. I don't want to guess where the market is going, but based on the probabilities, 24 delta, we saw it was a 20%. I need to collect at least $100. So forget this. I'm going to cancel Facebook. I'm left with Tesla. I didn't even look at delta of Tesla, but I know usually it's pretty good. So 20. So let's assume it's 20%. I could log into IQ Edge again to see what the probability is. Yeah, so I'm logging back into IQ Edge. I guess I should have done that the first time. So I'm going to look up Tesla. So yeah, Tesla is showing a probability at a 640 strike of 18%. So pretty close to the delta. So I'm going to go back to my browser version now. So yeah, at 18%, 90 cents, 95 cents is good. It's break even, but since I plan on closing the trade as soon as I get 50% profit, then that sort of gives me an edge. I guess I'll bring it down to 90 cents. And I'm pretty sure 90 cents is going to get filled right away. Okay, it didn't, but I'm not going to go lower than that. I'm going to leave it at 90 cents. If it gets filled, great. If not, too bad. I do want to look at Facebook again. I feel bad. I know Facebook is going to do well, but I don't want to make any assumptions. So I like to use this website as well called Earning Stats. It gives me the stats on the last earnings for a particular stock. So for Facebook, for example, it shows me since 2013. So for the last 28 earning events for Facebook, you could see that it went up 64% of the time. So out of 28 times, it went up 18 times after earnings. It stayed inside expected move 57% of the time. I mean, we did see Facebook drop 25% at some point after earnings. I mean, you can see it right here. It dropped almost 20% after earnings. And last earnings, you could see that it dropped as well. All right, I think I'm gonna go. I think I'm gonna take the risk with Facebook. I'm gonna go with May 29th, and I'm gonna go with here. Let's just calculate the expected move again. 196. So let's go with 195. So it's about 9 points, and on the call side it's 10. So I said 20 points. Okay. So 195 minus 20 is 175. So I'm going to go with 175 and 170. And I think I'll just do Facebook. I won't do Microsoft. So I'll stick to Tesla if it gets filled, and I'll stick to Facebook as well. Facebook, I think, has a good chance of getting filled. So 175, 170. I'm going to go with, pretty sure it was higher before. I'm pretty sure I could get 80. I'm going to go with 80 cents. I'm not going to go lower than 80 cents. Send order. So sell to open 1 Facebook May 29 175, buy to open 1 Facebook May 29 170 put, asking for 80. Capital required is about 420. Gonna send order. So I'll just wait now. I've got 30 minutes to go. I'm not gonna touch them. If it gets filled, it gets filled. If not, then too bad. I do So today is Wednesday, and I normally sell a put credit spread on the SPY no matter what. And I started one this morning, and looks like it has no chance of getting filled. So I'm going to adjust it. I'm going to cancel this one. So here, if you're watching this video for my earnings trade, you get to see my SPY put credit spread that I place every Monday, Wednesday, Friday. So I'm going to look up the SPY, do a vertical, go at May 29 because it's 30 days away. I'm going to look at the implied move. SPY opened this morning at 290 or 291. Right now it's 294. Ridiculous. Really ridiculous. All right, so 294 gives me a at the money put value of about $8-9. And for the call side, it's about $9, so $18. So let's do 294 minus 18. I cannot do complicated math, so I'm going to use a calculator. 294 minus 18 is 276. So I'm gonna choose a 275 strike and a 270 long put. 270. All right. So the capital required for this trade is 500. I want to do a put spread, not a call spread. So put spread, I can collect about 70 cents. Oh, that's terrible. Let's go for 72 cents. Delta on this is 30. So probability wise, it's not a good trade, but based on historical performance, I know there's at least an 80% chance that the SPY trades above 275 come expiry or in the next 30 days. All right, so I'm going to place an order for 72 cents for this trade. So sell to open one SPY May 29 275, buy to open one SPY May 29 270, 5 points away, asking for 72 cents. All right, sent order. So now I've got 3 orders pending, and this is actually a put spread that I'm trying to close for profit. Trying to close it for 40 cents. It's trading between 43 and 49, so it's getting close. All right, so I'm going to leave it at that. If you have any questions on these earnings trades, leave them in the comment section below. And like always, if you're going to open an account with Questrade to trade on the stock market, use my referral link in the description below to get $50 in free trades. Thanks for watching.